day. It's really incredible because the inflation news itself, it seems much smaller than the rally that we're seeing. But maybe it's that fourth down report in a row that does have people thinking about peak inflation. However, are rates done rising? Because as you were showing, that home building sector absolutely popping up 10%. It really seems to assume that. Is that true? Christian from Hertz of Tribeca Trade Group. Come on into this conversation and save me. So I guess two questions. Are rates done rising this year and into next year? And what about stocks? Have we seen a bottom? Is this the bottom? Has all the bad action been had?
Well, yeah, there's certainly a lot of interesting moves going on today, both on the short end of the curve and the long end of the curve in terms of interest rates. Looking at TLT, for example, we'll kind of start with the long end of the curve. I mean, I really like the move that we're seeing today, big rally in bonds, and kind of takes the pressure as interest rates go lower off of equities a bit. And this is the first day that TLT is above the 20-day moving average since back in August. So it's a little break of that, big short-term downtrend. So I think that's number one, pretty good. The short end of the curve, I mean, we're just going to have to see. I mean, there's a little adjustment to Fed fund futures, but I think some progress, as you mentioned, with the CPI rate.
Yeah, these stock, taking a look at these averages, just up between 5 to 10% on a day, very reminiscent. In fact, it is the best rally since April of 2020, coming out of that pandemic bottom. So relative to technicals, which of course I do take a look at from time to time, we have the S&P 500 back above the 100-day moving average. It looks like it's clearly going to go to the 200-day moving average, which is not so different than the case a couple weeks ago. In fact, the bear market rally yesterday, we were already up 6%. Now we're adding to it. Do you think that when we get to that 200-day moving average, if that happens, and again, it seems likely, do you think we go above and take out the August high, or do you think that there could be some more downside, and will rates be going in the inverse direction?
Yeah, well, I mean, I think that it's still a decent move to get to that 200-day moving average. I mean, I'm quite pleased with seeing, that we're above the pivot from, right at the end of October. So I think that I'm with you that I think that we could see a move up to the 200-day moving average. And then we'll just kind of have to see what type of participation that we get. Also, coupled with rates moving in the right direction, I think also the dollar moving down. So I think if these things kind of continue and are really good indicators for the overall riskiness in the market, right, we'll have to see towards, when we get there, what type of participation we're getting under the hood in the equity market, yep, as well as what those two things are doing, rates and the dollar.
That'll certainly be an interesting moment, two of them. And you use that pivot word. So let's talk about some sectors and names that you like relative to this environment, at least for the short term.
Yeah, I mean, I love what the Dow has been doing. Dow stocks I think are really good because, again, you can't forget that interest rates have moved up, and we're looking at a Fed funds rates that's going to be in the 4s. So I think knowing that we have a higher interest rate, I love what's going on with the Dow stocks. They got to the 200-day moving average first, and they managed to get above. And then in terms of sectors, which, with this move in interest rates, I like, something a little bit more high beta right now, which is biotech, which has actually been holding in there pretty good, and is just getting over the 200-day moving average today.
Well, not a lot of talk here around the Dow stocks, Christian, so a breath of fresh air to hear that you like them. Christian from Hertz of Tribeca Trade Group, thanks for joining us for Options Insight today. And from New York, this is Bloomberg.